All right, guys, we are live. We're gonna be back testing. Here we go. Gonna see what we can learn from price action. No, my trade, my 30-yard trade did not play out. It's all good, dude. That would have been crazy if that played out. If you guys know what if you guys don't know what I'm talking about on stream, I tapered this. This was so crazy. But unfortunately, it did not hit the target. So, but nonetheless, still 29. What? This is probably like 20R, 22R. Would be very crazy if I took that. Anyway, we're going to be reviewing the market here, seeing what we can learn from it. I'm going to get out the folders and I'm going to get out everything else that we might need. So, yeah, here we go. Boom, boom. Yesterday was a day where I did not want to backtest. Still backtested anyways. Today, I feel like I'm more of in a mood to backtest. So, anyway, I'm also going to show the trade that I took and like kind of explain the logic behind it and why it was so good. And actually, I still need to journal my trades. So let's actually start there with journaling the trades. And it's hopefully going to bring a lot of light to like what this trade was and honestly how I could have executed it a little better, because I do think I could have executed it a little better. So I'll show you guys all of that. So this was the trade, right? Higher time frame was expanding to the upside. I was extremely bullish because London made low of the day, manipulating midnight, manipulating 130, and then it was a giant 1 hour 2022 model to the upside. So I was expecting this, which is previous day's high, which is also, I mean, I'm not sure, but I'm pretty sure it's a data high because it looks like a data high. So bang. So this was a draw on liquidity. Then we also had these relatively equal highs, which, well, they have not been hit. But as well, we had an RTH gap above. So all of these were just reasons why I was thinking that we should be bullish today going into the market. And we definitely were. At least for sure until the RTH midpoint. And then at that point, it was like, well, we kind of slowed down a little bit, but we're going to backtest it and kind of see why. So closed there, opened there. So here's our RTH gap. And let's mark this out. Where is it? Bang. So overnight gap, there you go. Switching this back to electronic trading hours. So you can clearly see kind of what I was thinking, right? Once again, higher time here. Let me get rid of this. Once again, we had the overnight gap, or actually it was Thursday's overnight gap above us. London made low of the day. We had a 1 hour for value gap that we were delivering from. So this was a really high time frame 2022 model in my opinion, where we have this giant 1 hour gap that we were delivering from. We were expanding higher. And then we even had probably a lower time frame gap. So we had a 1 hour gap here and then a 15-minute gap here. It was very clear to me that we were just going to continue expanding, at least to partially fill the RTH gap. At least, I mean, obviously, you guys are entitled to your own opinion, but that's the read on the market that I saw. So with that in mind, right, you can kind of see where I was coming from with this trade. So 1 hour for value gap, 15-minute for value gap, and then, man, this makes 7:30 trade, the trade at 7:30 look so easy. 1 hour fair value gap, 15-minute fair value gap. We had a previous day's high here. And then basically something that you want to remember is when the higher time frame is clearly getting displacement, these 5-minute gaps and 3-minute gaps and 4-minute gaps and 2-minute gaps and 1-minute gaps, they're all likely to hold. So this is something that I've known a lot from my backtesting, which is exactly why I took this trade. Because I know, wow, we have very obvious draws on liquidity to the upside, previous day's high. That should be a very clear target. That was my logic, right? I said this should be a really nice, clean, what's the word I used? This should be a safe trade. I said this should be a safe trade. Why did I say it should be a safe trade? Because I know we're probably going to at least hit previous day's high, and then I can go break even there. And it was probably less than like 0.3 of an R to get up to previous day's high. So I just knew that is very unlikely for us to have it be a loss, right? It could have been a break even, but I did not think it was going to be a loss. So 5-minute gap, previous day's high, and then I'll show you guys the entry, right? So 5-minute fair value gap. Here we have the true opens, so we manipulate our 90-minute true open here, bang, into the gap. We also want to see if there's SMT, but I'm pretty sure there was. And then 928, around 928, that's going to be the 22-minute true open. See how both of those get manipulated with this initial market open fake out here. This move right down, lower right here, right, takes out both of those true opens. My guess is we had some kind of SMT with this low, which was a big part of the confluence for the trade, I'm pretty sure. Yeah, massive SMT, absolutely massive SMT with this low into the gap with ES. So, boom. Everything, all the true opens get manipulated. We get SMT. It's a 22-minute SMT, which is, what is that? Sequential SMT. So let's actually mark that out. Why is it 22-minute SMT? I don't even have to check. I don't even have to check because I can just use the true open as a reference point and say, wow, this is the 22 minutes before, this is the 22 minutes after. So this is 22-minute SMT. Now, technically it might not be a true 22-minute SMT. Honestly, I think I might just stop using the true and partials. I really don't think it matters, honestly, whether it's partial or true. It's actually I like that a lot. I think I'm gonna stop caring about that. So I might delete all those soon. So bang, 22.5 minute SMT. We have a 5-minute fair value gap. Bang. We have previous day's high, which is just a great break-even spot. Even this is a great break-even spot, and then we have the overnight gap just looming above. This is Thursday's overnight gap, I believe. Yeah, see Wednesday to Thursday. But let me just go over here. Yeah, so Wednesday night, Thursday morning. So what would you consider that? Wednesday or Thursday? Maybe I'll just call it Thursday. I don't really care. Thursday RTH gap, right? So you can clearly kind of see where I'm coming from now, right? With my trade, we have a really good break-even spot. We have obvious draw on liquidity to the upside, as well as equal highs, which unfortunately actually did not even get drawn to. I thought these would get drawn to, but they did not. Looks like they're getting drawn to now, but they did not get drawn to initially. Was there any other draws on liquidity to the upside? I think, let's see, session draws on liquidity. Let's see. Nothing obvious. I think it was mainly just the forget what it's called. The RTH gap. So a good lesson with this is honestly a lot of the time if it's like a pretty big RTH gap, definitely just, consider taking profit at the RTH midpoint because it's just such a big gap, We can now also put quadrants on this. But I don't think that's that helpful. Okay, so anyway, this is the trade I took. 5-minute for value gap, 90-minute manipulated, 22-minute manipulated, 22.5 minute SMT. I just now realized that this is wrong. I have to mark it out like this. Okay, and then look at this just amazing displacement on this candle here, right, going into 932. So you can just clearly tell that this is just really solid and unlikely to fail. So right here, we get the change in state, bang. Essentially no drawdown. Yeah, this was A+, and then bang. So now the question is, how could I have made this trade better? Because this was such a good trade already, but one of my couple issues I had is I trailed the stop, got trailed out, and we continued up to the RTH midpoint. And also, I think I measured out projections badly. I think it'd be better to measure out projections from here to here. So exactly like this. Let's see. Do we hit 4 projections? You took it? You took this trade? Let's go. You take it as the 1 minute inversion? I took this exact same trade too. And then I went break even at previous day's high. And yeah, this is textbook flow state right here where you have a higher 5-minute gap and a line time from change in state. I can tell we just have an amazing break-even spot. Now, yeah, what was I going to say? Amazing break-even spot. You could have taken this as a 1-minute inversion. There was a 1-minute inversion. I saw someone else talk about that. Okay, here's what I'm wondering, right? Why do we not hit 4 projections? Did I maybe measure it out not the best? Wait a second. What if I measured out... I'm trying to figure out a better way to measure it out so it hits 4 projections, because... Not gonna lie, this is like so close to 4. We even retraced the 50-minute for value gap. It just makes me wonder if I measured this out somewhat badly, or maybe we just didn't hit 4 projections. Like, I'm wondering, maybe it's better to measure it out like that. Does that actually fix it? That doesn't even fix it. Honestly, we probably just didn't hit 4 projections, which, it's fair. It's reasonable. I mean, sometimes, like, it's at the end of the day, projections are just a tool. And, I mean, you're not always going to be perfect with projections. So, at the end of the day, it's all liquidity, so it's not gonna matter. The projections are never gonna be perfect. Even retracing the 15-minute fair value gap, yeah, it was crazy nice. So, okay, if I could redo this, I'm trying to think. So I entered with one con, right? And so I get in on this candle when it closes with one con. And, it's about 1R from where I get entered to where I get stopped, which is right here. Hey, Jake, what do you recommend when trading evals as far as risk and amounts of micros for a 50K? When I did it, for evals, though, I don't know about for evals. When I was doing it, I don't know if this is I don't know if this is best because, like, genuinely, I sucked at prop firms, but I was doing, like, 200 per trade because I just never wanted to blow evals, but a lot of people advise against that, or, like, I was doing, like, 250 per trade, but I don't know, man. That's why I don't trade prop firms anymore. I don't know. I think I was doing 200 per trade, or maybe it was 250, but it kind of depends on the trailing drawdown. Maybe anything from like 200 to 400 is probably fine. Just kind of depends on your own personal conviction. But just keep the risks the same every time. That's what I would do. Pick something that you like and keep the risk the same. Maybe 250. 250 might be fine. 300. But yeah, it's just going to depend on but then again, it's an eval. Oh yeah, I remember I was on evals. I was doing 800 per trade because I needed to pass it. So you might if you want, because if you think about it, 800. It just depends on how much. It just depends on how much you want to. I don't know, like how fast you're willing to either pass or blow an eval. If you're feeling aggressive, you could do 800, which gives you three. It gives you basically three losses before you're cooked, right? Because 800, 1,600, 2,400. So that's if you're okay with blowing it fast. If you're not okay with blowing it fast, maybe like 500. Yeah. I would agree with Bob. I would agree with Bardo. And actually, I actually changed my mind with evals. With evals, you should do higher risk. Get that thing passed right away. Once you get funded, you can drop that risk down. But yeah, there's a reason I don't like prop firms. Yeah, I only trade my own money now. I don't know. I just had this realization one day that why do I need to try and be a millionaire right in like 2 days, right? I had a realization like, wouldn't I just rather just be making consistent money on my own terms without having to deal with all the rules and just actually make my own money and take my own setups and let them run as far as I want without having to deal with consistency rule and then it's just like, wow, why wouldn't I do that and just like start with one micro or like whatever. And yeah, that's just me. I want to pay myself. I want to pay myself on my own terms. So, but yeah, I've just been doing personal, and honestly, I know I was losing money on like just the recurring fees with evals. Like I said, I don't really know what's best for evals. Probably 800 per trade or 600. I do 600. How's psychology? Is good because I've been practicing on sim. I just I've been just trading sim for so long that it's just like no different. But yeah, I don't know. It's obviously, you know, I don't know. It's just what I prefer to do. Oh, I got disconnected from the chat. All right, I got reconnected. I don't know. Like you have to realize like I was I was trying to do like a ton of evals at once, and I was just like, what am I doing? Why don't I just trade my own money? So I just started doing that. That's what I prefer. So okay, anyway, back to what I was saying. So let's just talk about the trade. Yeah. Don't necessarily do. Honestly, this is what I would do. This is just my own personal opinion. You can completely ignore it. But this is what I did. Save up money. Save up money. Trade on sim. Trade on sim for like a while. Like, just understand this is a process. This is like you're gonna have to do this in stages. This is what I did. I did this for like 4 to 6 months, like prior to before I started trading on my live account. Now I traded on sim, and just prove to yourself that you can just gradually increase the value of an account. And that's what I was doing. I was doing it really consistently on sim, and then in the meantime, you're saving money. And then basically what I would do, this is exactly what I would do, is when the account is so you make a certain number as like the minimum balance for the account, right? So the account needs, let's say it needs to be 2,000. It could be 500, it could be 1,000, I don't know. It doesn't really matter. When the account balance falls below that, stop trading on the account, go back to trading sim, and just trade sim until you have enough saved up to take your next trade on the funded on the live account. And just but trade all of the sim trades and the funded trades as if it's one account, and just keep rinsing and repeating that process. So like, for instance, like, okay, I take a trade on the live account, it's a loss, it falls below the amount that's needed to take a live trade. Okay, the next day when I show up, I take a trade on sim, I still record and journal it as if it was a real trade. I do that again, do it again, and then eventually I have enough saved up so I can take another trade on the live account, and then I take another trade. It's a loss. Okay, back to trading on sim. Eventually, you're not going to lose. Eventually, you're going to take a win. Okay, now I'm still trading on the live next time, and I'm trading on the live next time again and again, and eventually, all of a sudden, if you're truly profitable, you're going to get out of that starter spot, and then you're going to start scaling a real account. That's what I'm doing. I've been doing it successfully so far, but I don't want to get my hopes up or anything like that. But that's what I've been doing. Okay, I need to journal this. So, guys, this is how essentially this is how the trade ended up getting taken, where I got stopped out here, trailed out right there. But anyway, sorry guys, that was a long rant now that I'm thinking about it. But it might have been better to take it with just let's see, targeting. Let's see, what high is this? So I guess there was just like a pretty clear high over on the other side of the chart here. This was probably why we ended up slowing down, honestly. Because there's just no more highs. I bet you this is why we slowed down. We probably hit this. Yeah. So that makes a lot of sense. That makes a lot of sense, actually. So I think if I was to redo this, TP at that high. Or, actually not. It was fine the way I did it, but I could have targeted the midpoint of the RTH gap. Okay, point is I need to journal this trade. I need to journal it. So I'll just record it how I took it. So basically, I put in a trailing stop when we hit this high. And then I put, or when we hit this, well, where was it? Yeah, when we retook this high, I put in a trailing stop. and then I put the trailing stop for this low, and I got trailed out, and then it went right all the way up. Let's just say that I was gonna target the RTH midpoint. I think that's a very reasonable place to target. That's very reasonable. So, yeah, like this. So it should have been 2R, ended up being 1.15R, but it should have been 2R. Okay. Bang, bang. So I could have entered on the retest, but I really don't think that matters. It's like, what, a couple points difference. Just gonna screenshot it. So, okay, 9:32 flow state, 5-minute gap aligned with the 30-second live. Oh, does watching your stream every day count as me backtesting? I'd say so. I'd say so. I mean, I do all the work for you. Why wouldn't you do that? Because, I mean, you can also watch it on double speed. Get twice the amount of backtesting in that I got, but you can watch it 2 times as fast. And you don't have to do anything. You can just relax and just watch. So I would say it's actually better to do it like that. You get twice as, or you, whoa, I didn't mean to do that. Okay. I'd say it's even better to do that. Sorry, I have to finish the journaling for today, so I'm not done, and then eventually I'm gonna get into just reviewing the market, but I have to finish this. And I do want to record how I could take this trade better, because I did not take this perfectly. Like, I'm gonna be so for real. I think there was a reason we stopped there, and I would like to know, like, what was the logic behind that. So this was supposed to be 2R. Yeah, just watch some past ones for sure. Why not, right? Allows you to just get the back testing in without having to look around. Just, I do all the work for you, you know? Why not? So I just put it in. All right, I'm gonna take some notes, or let me think. Okay, how could I have taken profit on this better? I'm not gonna lie. I kind of think measuring out projections like this is better. Whoa, wait. Yeah, because I would definitely put stop loss underneath the momentum candle here. Because why would we come beneath the momentum candle? Ah, yeah. Yeah, this is the refined way I could have taken this trade. Because why does stop loss need to be this low? It doesn't. It does not need to be that low at all. So this is where stop loss would be. And then once again, with these kind of things, with projections, measure out projections from your entry to your stop loss. And now, all of a sudden, 4 projections and 2 projections both end up working out way nicer. Dang. Okay, so that's definitely the way I would have fixed this, honestly. So that's actually super valuable that I just realized that. So, okay. So this was an amazing trade. It really was. The only thing is, it was hard to trade with one contract because I couldn't scale out. If I could have had more than one contract, it would allow me to take multiple TPs, but instead I had to trail my stop loss and I got trailed out. Now, yeah. I also realized a better way I could have measured out standard deviations on this, and a better place for me to put my stop loss, which is a W that I will definitely remember going forward into the future, right? Because once again, I put the stop loss on the trade all the way down here. Do you guys really think I need this much stop loss when we have a momentum candle and a great break even spot and true opens manipulated? No, right? I don't. So okay, so yeah, this is the refined way to take this. So yeah, stop loss there, and then all of a sudden now we hit 4 projections. Actually, I'm just now realizing I have to measure it from. See how much better this is. Okay, from the entry. So you have to mark from the entry, right? You can't enter on this candle. You have to enter on this candle, right? From the entry, you don't enter there. You enter there to the stop loss. All of a sudden, this becomes really precise. This becomes really precise now with standard deviations. So and then the third standard deviation above the RTH midpoint, and then you see how this is actually a way better way to measure this out. And then 2 projections here. Yeah, once again, way better way to measure this out. So instead of measuring it out from here to here, I really only need the stop loss there because of the displacement. Okay, so refined execution would be TP1, TP2, and TP3 like this. And then trailing. And then honestly, trailing stop loss needed to go, honestly, probably at the break-even point. Like, or within this gap. I trailed it way too aggressively. And then I would do TP, I would do stop loss active here. And then trailing stop loss. So exactly like this is how I would take this if I could redo it. And if I had 3 cons. What a more beautifully refined version of the same exact trade that I took. Much more beautiful. Interesting how my trailing stop loss is the old break-even point. Yeah, if I could redo this, I'd do it like this. Flow state, 5 minute, 30 second, refined. So either way, so great trade though. I had the complete right idea. And honestly, made the best decisions I could in the moment. But now, yeah, I'm just gonna say that. Actually, I'm just gonna get rid of that. Okay. So yeah, this is how I would have retook it, and then what was the shoot, I accidentally did Control Z on all this. Sorry, I'm trying to. I accidentally did Control Z on the whole spreadsheet. I'm trying to figure out how much of a return I got. I think it was 1.15. Yeah, about 1.15. Assuming I had taken it with the perfect amount of cons, which is how I journal it. And then we'll review the break-even trade as well. So let's do that one. And then I'll put all the screenshots in. So the other trade I took was break-even. And it was on the 15-second. I really like this one. So I was looking at, first of all, let's go through everything that happened, right? So first of all, perfect manipulation of 90-minute true open here. What's the number on the Fibbo mean? What? What do you mean number on the Fibbo? They're just standard deviations. They're just projections. 9, 22, 30. So right there. See how we perfectly manipulated that? Do you see that? 9, 22, 30. We closed there. And we perfectly manipulate it later. With SMT, guys, true opens. This is how the market moves, right? It's time-based premium and discount. We efficiently retrace back to time-based discount, and we go higher, right? So 9, 22, 30. What does the number on the Fibbo mean? Previous? I don't know what you're talking about. So this gets manipulated with SMT, right? We have some kind of SMT here. Yeah, SMT with 930 lows. Beautiful SMT. So bang. This, I think this was a higher time frame gap. Let's see, 15-minute? Or is it 5-minute? So you can mark it out as, I guess, like a 5-minute gap. You could also mark it out as an implied 15-minute gap. Yeah. And then let's find the other true open. So we want to see what true open happened next. I'm just slowly adjusting these over time. Yeah, 10-13. So right here. How fun is this? You guys see this? 10-13. Oh wow. Yeah, so you can see why I liked this, right? We had SMT with this low, and then we had SMT with this low, manipulating this true open. Yes, I see why I took this trade now. Or was with this, hold on. It was with this low. Yeah, I can see why I liked it. So let's see what we can learn from it, I guess. Right, so delivering from this gap. Whoops. So ES, SMT with ES. And then the trade I took was on the 15-second. So we dropped down to a 15-second, and we can clearly see, let's get rid of S&P. We can clearly see that, let's see where it is. Wasn't it on the 15-second? Did I really take this on the 15-second? Maybe this wasn't as good of a trade as I was thinking. Dude, I actually don't think this was as good of a trade, honestly. Now that I'm looking at it. This is not an obvious 15-second inversion. I thought this was more obvious than it was. Actually, yeah, this is not obvious at all. Why did I take this? Was I taking it? Did I mean to take the 30-second? Did I take the 30-second? Did I take the 1 minute? I took this one, didn't I? Okay, I took it on the 30-second, I think. Yeah, it looks a lot more obvious on the 30-second. Anyway. Yeah, I think I took it on the 30-second. Because I don't know, the 15-second does not look obvious. But I don't even like the 30-second that much either, because once again, external gap here. Yeah. We had to break this external gap. Honestly, let's get rid of this gap here. And yeah, I see why I took it, but I also see why it failed. So I probably went break even there. I went break even super fast because I'd already taken a win, so I just did not want to take a loss. I was hoping this external gap was gonna break, but it didn't do it. It did not do it. I can see why I liked it, but also I can see why it didn't work. Does that make sense? Because it's just like this external gap is just too much to handle right here. And this external gap was the reason that we did not go higher. External gap with equal highs. So yeah, that was the reason why I didn't continue. It's okay. I mean, it had pretty nice RR, I will admit. You know what I'm saying? It had pretty nice RR, so it's reasonable why you would take this. But yeah, I mean, we needed to break that external gap, and with equal highs and an external gap, it's very, very hard to break through that. Yeah, it makes sense, guys. It makes sense. You can complain about it all you want, but in all honesty, it makes a lot of sense. Why didn't it go? Yeah, it just makes a lot of sense. I don't know. There's nothing much else to say other than that's what external gaps will do. It was a good break even trade. Like, we could have broken the external gap, but with equal highs in the external gap, I feel like it makes an external gap stronger. I'm gonna make notes of that. So, very fascinating trade, and a lot to learn from this one. We had really nice LRLR above, and I was going, and I had a clear bullish bias. We manipulated the 90-minute true open with SMT. We manipulated the 22.5-minute true open with SMT. But we have one issue. We have one very important determining factor into whether this trade will work or not. And that was the external gap before the LRLR. Interestingly, the external gap had equal highs prior to it, and honestly, I think that made the external gap stronger. Overall, a good break-even trade, but definitely something to think about for the future when we have equal highs prior to an external gap to be suspicious. When we have equal highs underneath an external gap, to be suspicious if that external gap is really going to break. Makes sense? It's a very, very valuable trade, actually. A lot learned from that. 10:33 inversion for lag gap on the 30-second live. What time was this? 10:33. If you guys are bored right now with me doing my journaling, you guys can I'll still be going in like an hour, so you guys, or not an hour, in 20 minutes, so if you want to come back and watch later when I'm done, you can. But I gotta finish this. So post-trade approval, I definitely approve it. Would I take it again? Honestly, no, because I just don't think we would. I don't think we would break the external gap if I had to take this again. I don't know. I just don't think we would. Now I'm knowing that that external gap had equal highs prior to it, I wouldn't take it. So this probably would have been like, what, 2.3R? It could have been higher. I don't really know exactly how I would have taken it, but let's just say it was 2.3R. All right. Perfect. Okay, guys, I'm going to go ahead and upload these pictures to Google Drive, and then I'm going to add these trades to Reflect IQ, and then we'll start actually journaling. And honestly, I don't really care to tweet it right now, so it's fine. Almost there. So here's the one, here's the other, putting them in, boom. Yeah, let me put them in Reflect IQ. Guys, my Reflect IQ, I keep making it better. Or I keep taking better and better trades, and my stats keep going up, which is awesome. Okay, let's put the 2 trades in. So first it was the win, March 17th. It was flow state. And multiply 200 by 1.16. If you guys don't understand why I use 200, it's just because I decided a long time ago that I'm just going to use 200 standard risk regardless of how big or small my account is. So that way it's just super consistent. So that is right. Wait, didn't I say? Oh, I guess it's 1.15. Okay, 230. Whoa, what's going on? My mouse was acting weird. There we go. Bang. Wow, that was a crazy 3-win streak right there. That's pretty cool. And then we have the other one. Break even, inversion for value gap. Okay, hopefully I don't get the glitch. We'll see if I get the glitch or not. Nope, no glitch. Perfect. Dang, guys, look at my stats now. This is crazy. 39% win rate. 1.36 profit factor. Dubs. W. That's awesome. I'm getting better. It's pretty cool. One day at a time, just getting a little better day by day. Okay, now it's time for the fun part. We gotta actually backtest and review the market. Oh, this is the fun part. I'm gonna take a little break, but then I'm gonna review the market and do an in-depth backtest. So yeah, I'm gonna take a little break. I'll come right back. Sweet. Okay, this is the fun part. Here we go. So, a lot of interesting stuff to review today. What should we start with? I mean, right from the get-go with today, it was just so obviously bullish. I mean, we went right for the RTH midpoint. We did not go to the equal highs right here like I thought we would. But, I mean, guys, here's why the market was so bullish. It's very, very clear, actually. Once again, this is my high time frame analysis from this morning, right? We have a daily rejection block with SMT. Actually, I'm going to pull up the Discord screenshots, right? In case anyone's watching right now, I want them to understand. So, daily rejection block with SMT. Wow, I take a lot of screenshots every day. Okay. So this is my high time frame analysis. You can see there's a daily rejection block. So this is a daily Phoenix model dropping down. We manipulate the true opens into a higher time frame gap. Or this was yesterday, huh? This was yesterday. This is also yesterday. This is also yesterday. Okay, here's today. So daily rejection block, holding still, swept out those lows with SMT. Then we have SMT here. We have this as a 4-hour gap, but more clearly it's a 1-hour gap. And you can just kind of see how this is a 2022 model where on the high time frame we sweep out these lows, displacement higher, form a 1-hour gap. So I know that we're going to probably go run through all these highs and then eventually target this LRLR. So that was why I was bullish. It's just a 2022 model on the daily, or on the 1 hour. So from there, right, I had my bias. And let's look. Yeah, so 1 hour gap. You can see how well we used this. Once again, liquidity sweep, displacement, 1 hour gap, which probably was at equilibrium. My guess is we're going to go much higher because of this. Because equilibrium and a 2022 gap, usually we just continue to go up. So I'm going to probably be bullish here for the next bit. So, yeah, that's why I was wanting to be bullish this entire time. But then when we started respecting this external gap, I eventually just had to submit and say, yo, this external gap is just way too strong. Eventually I had to submit to this idea that, hey, like, the market's not ready to go to it, to these highs, because we keep coming up and sweeping liquidity into this gap and we cannot continue, right? So what is this? This is actually a 2022 model, right? Where we sweep out this high all the way over here. Yes, I am using this high. Honestly, the important thing is just understanding that it's just like a displacement move lower that creates a gap. That's really the important part. But you can just see the market structure is changing, right? So we sweep out this high. Once again, the important thing is the structures, we start displacing lower, creating fair value gaps. Where's the sweep? So yeah, we start displacing lower, creating fair value gaps. You can see throughout 950 to 1010, we actually had spooling, which is kind of cool. I did not realize that initially, but looking at it now, it's actually really obvious. which is something, actually, you know what? Let's actually start by looking at that. That's actually sick. We have a gap here. I'm marking out from the volume bounce to the high, from the bottom of it to the high. Then we have a gap here. Then we have a gap here. This is all occurring during the macro. We might be more clear on the 30-second. Or the 15-second. And I also want to check SP Pro. I just put my phone on silent. So, displacement below old lows. Displacement below old lows. Displacement below old lows. Okay, so this is the very nature of what you expect to see in the if in spooling, right? All of these gaps are holding. And what else? Yeah, it's during the macro. Here's 950. Oh yeah, I was gonna check SP Pro. I love this thing. Such a cool software. I just don't know if it's that obvious, honestly. Okay, I actually don't really care to look at this. I guess it's not that obvious. We did have SMT here, though. Would this be silver bullet then? I think it would be, because it's a gap. It's a 2022 model gap that forms after 10 a.m. Yeah, I would think so. Let's get rid of this. This one's not obvious at all. And neither is that. But these two are obvious, right? It's actually a propulsion block. Yo. We have two different, we have OB, PB, PB. Wait, we have a propulsion block off a propulsion block. That's crazy. Yeah, when you look at it like this, it's actually very obvious. Okay, I'm starting to see it now. 950, right? 950 to 1010. You can see the spooling occurring. If you just literally just look at the 1 minute chart and just ask yourself what gaps are getting respected, and where are we displacing through old lows or old highs, right? Displacing through old lows, holding gaps to the downside. Displacing through old lows, holding gaps to the downside. Okay, so where's the direction of the market? Spooling to the downside, right? It's very simple when you look at it like that. Like, are we breaking old lows, holding gaps, breaking old lows, holding gaps? It's probably spooling to the downside. You see what I'm saying? This is 950 to 1010. Right? And then we have an SMT here. right? So no price clearly breaking old lows with displacement and respecting FEGs in the macro. Spooling. Hi, you on Discord? Yeah, I got a Discord. So you guys see kind of when spooling is obvious, right? This is exactly what you expect to see in the macro, and it really does get this simple. Like if I see breaking of old lows, respecting of fair value gaps, breaking of old lows, respecting of fair value gaps, and then also what's this? Order block, propulsion block, use of the propulsion block with SMT, I'm gonna know we're gonna dump. Right, so I'll show you the trade that we probably get right here. We probably get a trade right there. Unfortunately, I was really, really bullish, but if I had maybe been looking for shorts, I would have seen this. So, bang. Price, or I'm just going to put spooling. So, once again, this is a pretty clear propulsion block. It's actually a propulsion block off a propulsion block, which I've never really seen before, but I don't, that usually doesn't happen, so I'm not going to mark it out. But here's your order block. Let's get rid of the fair value gaps. Here is your propulsion block. Breaking old lows into the macro. So OB and then PB. Let's have consequent encroachment of both marked. Well, for sure of the order block. Actually, let's mark the propulsion block out like that. Yo, it happened again. Whoa. That's insane. You guys remember yesterday's stream? Or was it the day before? Was it Friday? I don't remember. But do you guys remember what I said? Where you want to see mean threshold of the order block, but then 0.25 of the propulsion block get held? I think there's something there. You guys see this, right? Mark out, once again, to mark out the mean threshold, you want to do body to body, and then you get the mean threshold. Same thing, I guess, with propulsion block, body to body. Look at this. Look at this. Order blocks, you want to see mean threshold. Propulsion blocks, you want to see 0.25. That's crazy. What a crazy discovery. And this happened on Friday too. It's literally, if you see this signature on a propulsion block with 0.25 getting respected, you know that like we're about to dump, right? That is smart money showing its hand. That's crazy, guys. Do you guys see how cool this is? We appreciate the hearts, guys. Wow, that's insane. That's literally insane. What a cool discovery. And I talked about, go watch my stream from I think Friday where I saw this exact same thing happen. Dang. So you want to see 0.25 or 0.5 of a order block. Of the OB used. 0.25 of. What about CE of a propulsion block? That's the thing. Like, I think like it's actually better because if you really think about it, right? If a propulsion block is gonna work exactly as it's supposed to, what is a propulsion block? It's when we're getting really good displacement and we're holding an order block that's already been used. So if we have an order block that's been used, we go to mean threshold, and we have another order block. If it's going to be a good propulsion block, we really only want to see that 0.25. If it's going to be a really good propulsion block, we really only want to see that 0.25. If you see the market tickle it, you see the market tickle the 0.25 of a propulsion block after utilizing the order block's mean threshold. If you see this happen, you'll know this propulsion block is really high probability. Right? This, you don't want to see mean threshold of the propulsion block necessarily because then it's not really doing what a propulsion block is supposed to do. But I mean, it could. But I from what I've seen from my backtesting so far is you really just want to see it kind of tickle the 0.25. Tickle, that's such a weird word. I don't want to say that again. Dang, bro. What a cool discovery. I'm trying to get a good picture. Hold on. Where is it? Where is it? Okay. Why is there not? Maybe it's not. Oh, there it is. Bang. That is how a propulsion block is used. Bang. .5 of OB, 0.25 of PB. So this is all going on in the charts in your head while you're watching price. You're watching the order block get used, the mean threshold. You're watching the propulsion block get used, 0.25. All of this is going on in the back of your head. While this is going on in the back of your head, you drop down to a 15 or 5 second going into looking at this propulsion block. You already know it's likely going to hold because why? Because we're using the 0.25 of it perfectly, and we get S&T into the 0.25 of the propulsion block perfectly. So you already know this is a really high probability propulsion block. You already know. So now you're setting up for Dynamis, right? You guys know Dynamis? Have I told you guys yet, or do you guys remember? Right, you want to see a 15-second or a 5-second change in state of delivery out of a propulsion block. That sounds good, bro. That sounds good. You want to see a 15-second or a 5-second change in state of delivery out of a propulsion block. The fact we're using 0.25 should give you insane conviction for Dynamis. insane conviction. This should give you insane conviction, especially because we got S&T here. So we end up getting change in state there. Let's see if there's an obvious one on the 15 second, because that one might be more clean, I guess you could say. Yeah, so this one's more clean on the 15 second. Honestly, I like this one right here. So I like this, sweeping these equal highs into the rejection block. And then I like this just candle that closes right there. Boom. Closing below the volume imbalance there. Boom. 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 Liquidity sweep into the rejection block. We already know Phoenix model traders are in this because the rejection block's being used, right? So we know Phoenix model traders are in this. We get the change in state here. Relatively equal lows. Relatively equal lows. Liquidity void. Right? Where's a logical place to target? Well, let's see if there's any new day opening gaps or new week opening gaps. Wow. 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 Look at that. Look at that new day opening gap there. Okay, that's actually... We're going to have new day opening gap later because that's going to be a really, really nice low time frame precision swing point trade off of that low. I'm guessing. Or like a low time frame. There's going to be something off of this new day opening gap because it souped the 90-minute true open. But I'm going to look at that after. So, anyway, this new day opening gap could be your draw on liquidity, actually. This new day opening gap could definitely be your draw on liquidity. And maybe the equal lows are your draw on liquidity. But understand, this is all void, so this is likely just gonna get it's likely gonna crumble down into it because it's all void here. So equal lows. Well, actually, let's just mark this out as all kind of like L or LR here. And then all this as void. And then, right, new day opening gap right there. Bang, 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 bang. Y'all see this? So if you took this, right, this would be crazy. But like, my guess is if we measure out Dynamis projections, that the new day opening gap with 9/22/30, which is the true open. So here's the true open. My guess is, hold on. My guess is if you measure out projections of Dynamis down to 9/22/30, you're going to get pretty precise projections. Let's see. Right. So drop this here. Let's project out, let's see, this candle. Eight projections. There's 7, there's 8. Let's say we take it from this to this. I told you. I told you. Now, I'm not actually measuring this out perfectly. If you measure it out like that, then there's 7 projections. So there's so many different ways to measure it, but no matter what way you measure it, it's still giving us really accurate take profits. Yeah, I don't know. The new day opening gap is very logical. This also very logical. So is this. Let's just say that we used it like this. Whoops, how'd that happen? Beautiful, just beautiful. Does it just make you like, I don't know, doesn't it just make you happy? Like the market's just this precise. Doesn't it just give you hope that like given enough time you will master trading, because it's like the market's just this precise, so it's just like, well, we're obviously just gonna keep going until we get it. That's whenever I see stuff like this, that's just all I think is like, so basically what you're telling me is as long as I don't give up, I'm a get this down. It's basically how I see it. And I'm like, dang, okay, so I'm just never gonna give up then. Boom, look at that. New day opening gap right at the bottom of this void. LRLR right here. SMT with ES, liquidity sweep into 0.25 of the propulsion block, 0.5 of the order block, displacing below old lows in the macro. How many people are going to see this? Not very many. But those who do, they're going to get it. And we enter right here on this 15-second change in state off the propulsion block. Obviously you scale out, but run this, you would scale out as you go lower, but run this down. LRLR here. And yeah, like I said, you're obviously going to scale out. That's besides the point. We already know that. And yeah, final TP at 7 projections. Boom. And what would give you the conviction? The 0.25 of the propulsion block. And also the fact that this is high resistant liquidity, right? So everyone longing this, getting cooked, right? We know that like people that are still bullish into this high resistant liquidity are going to be our liquidity to take profit. So using high resistant liquidity as a confluence. So sick, dude. We could also use true opens, right? We're obviously above the 90-minute true open, but let's check the 22-minute true open. What's the 22-minute true open? 950.37. So you can see we soup that into the OB right here. That is just ridiculous. That is ridiculous. The precision is unmatched. Unmatched. You can't fake this. Let's see SB Pro. I just feel like we get so much better at trading every day. Every day that we backtest. It's like it's getting kind of crazy. Yeah, we did have a market buyer here. We're actually getting a lot of market selling though into these dumps, so kind of a little opposite of what you would expect. Bang. That's all I have to say to that is just bang. That is so sick. Wow. Does this make you smile a little bit? It's like, bro, that's crazy. We don't need this. Okay. So there's Dynamis on the 1 minute aligned with the 15-second at 10:09:45. One minute aligned with the 15-second. Saving that. I'm gonna put this in trades from today. What is this? 10:09:45. That's so sick. Ah, man, I just can't stop looking at this trade. It's so cool. jeez. Okay. Time to go look at this new day opening gap with true open here and look for longs. Oh my gosh. Bro, the precision in these markets is unmatched. It's just it's insane. I can't believe it. New day opening gap. My guess is we end up getting some kind of precision swing point on the 5-second or the 10-second. Something like that. And why would I have conviction? Because we have market open SMT. We have market open SMT. So boom, boom. SMT below the 90-minute true open. It's like, okay, we're probably going to go higher, right? If you see this, we're probably going to go higher. So SMT with ES. We've obviously filled now this void. And let's go down. Check. Right? And there might... Let's actually go on the higher time frame real quick. Nah. Okay. Drop down to a 5-second. If this is a precision swing point, I'm going to lose it. And let's also check to see if there was absorption. Oh my gosh. Yo. You can't make this up. Oh my gosh. There's absorption and aggression on the 5-second off of this end dog. Yo. What? This is insane. Hold on. Wait for this to load. Wait. You'll never guess who market sold into the end dog and who market bought off of the end dog. You'll never guess. Well, I don't know who they are, but 2 whales. 1 smart whale, 1 dumb whale. Check this out, right? Yo, you can't make this up. You can't make this up. Dumb whale gets liquidated. A different whale sees this guy get liquidated. And he enters. This is absorption. This is aggression. This is the dumb whale. This is the smart whale. That's insane. Wow. So, honestly, even if... So, you probably don't need to get in right there, but when you see this, you can understand that we're likely going to go higher in the very immediate term. So, you could take this inversion for value gap. If you see something like this on an inversion for value gap, FA said that it like never fails. Like if you see something like this on inversion for value gap, he said it literally like never fails. So, oh my gosh. So let's mark out these whales here, right? Once again, dumb whale here sells 20 cons being liquidated below this low, right? We might have to get a different emoji to mark out that he's dumb. Let me ask ChatGPT this. I'm using emojis to mark out whether whales are dumb or smart on the chart. What emoji should I use for dumb? And what emoji should I use for smart? Combined with the will emoji. The clown emoji. Or you could do a school emoji. I kind of like the school emoji. Yeah, I think the school emoji. So this will gets liquidated right here. That's absorption, right? Dumb will. Dumb will. See that? He gets liquidated into the end dog. And then what? We have the smart will. That that aggresses price off of that liquidation. So, boom. Big brain will. Big brain will right here. Smart will. $20 cons. Bang. And then we get the inversion. Boom. Boom. If you ever see this signature in the market, you're about to cook. Right? I think let's check to see if it was a precision swing point at the low. Not with ES, but with YM. This is just a meme. This is just unbelievable. Like, I would almost feel like you could enter on that candle with conviction without even knowing that we're gonna inverse this gap. Anyway, it's not a precision swing point, but we do end up inversing this gap here. So this is how I would take this, okay? So this is my shadow model where we get a trade off of the new day opening gap. And basically what I would look for here is this. When will the Cantina kill shot model be free? I made it free for like a week. I made it free. But I can tell you what Cantina kill shot is if you want, since you're here in the live stream. You really want the Cantina kill shot, huh? I made it free for a week. Or like half a week. I don't know. I'll make all my members only free videos when I'm a millionaire. But no, actually, I will. Yeah, I know, but the reason is because it's something I discovered, and I do want to diversify my income. Like, as much as I initially thought, like, I'll do everything free, like, I think having diversified income is good, but like I just genuinely want to help people, and so everything else that you could possibly ever need is free on my channel. It's all free, but it's just extra stuff, you know. Like it's something that I discovered that is really cool to me, and so it's just extra. You don't need it, you know. But every like literally so I have so much free sauce, like literally everything, you know. But you don't need the Cantina kill shot. I'm just saying. But I'll tell you what Cantina kill shot is if you want it. I'll tell you right now. It's such a funny question. You want me to tell you what Cantina kill shot is? Okay. Well, I want to finish journaling this trade. I'm really liking this trade right here. Okay, I'll just tell you. So basically, going into news, I'm gonna keep it very brief. Going into news, there will be some kind of either a news event or market open, either one, right? Actually, market open's a little better, actually, but you first need to know what an outside bar is. So an outside bar is, boom, right? You have a prior candle that's smaller, and then the next candle after takes both the low and the high of the prior candle and usually closes with a lot of displacement. So like something like this. Something like this where it takes the prior candle's high and low but closes with displacement. So this is an outside bar. This is a prerequisite to understanding Cantina kill shot, right? So old candle and then bang. And a lot of time it'll even look something like this or like this, right? Or even like this. Either way, it's all the same, right? It's basically when this happens prior to news or market open on whatever time frame. It could be the 5 second, it could be the 15 second, it could be the 1 minute, it could be the 30 second, it could be the 2 minute, it could be the 3 minute, it could be the 5 minute. When this happens going into your news event or your market open, it's gonna tell you which way market open or news is gonna go. And if you don't believe me, you go back test it. Go back test it. And you will see that you will be right more times than you're not predicting news and predicting market open. I'm not going to go show you real examples because it's just going to, I don't know. I'm in the middle of back testing right now, but you just go back test it. Trust me, bro. Just seriously, it's amazing. But once again, if you want to watch the video, there's 5 examples in the video, and they're all really great examples. So, but yeah, that's Cantina kill shot. Once again, I could go find examples, but I'm trying to back test right now. So, but yeah, hopefully that was helpful. Bang! Look at that. Look at that. Dumb will, smart will. Off the end dog. With SMT. Manipulated the true open. So, bang. I'm taking this. I'm entering right there on that close. Stop loss below the IPG. And going break even at this high. Or even this high. Either one. Maybe these bodies. And then break even. You get break even in a couple seconds. And then you target this LRLR. You could target this. Honestly, I probably would not go through this external gap, but maybe if you wanted to, you could. I guess that's up to personal preference. But honestly, I would just target this LRLR here. That's perfectly fine. That's 2R. Anyone complaining about 2R? I don't think so. Wait, let's actually project. Let's project this out 4 projections. Let's just do that. Bang! 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 Jeesh. Now that right there, that's cool. Now imagine telling someone, like, I don't know, people just won't be able to believe it. Like, when you take trades like this, people won't be able to believe it. They can't understand how you could predict the market this well. But we know. We know because we understand what the biggest participants in the market are doing at any given time, and we understand smart money targets the biggest dumb money. Right? And once you understand that, that's what removes the market, right? The whales. So LRLR here, take some off at 2, some off at 3, take some off at 4. That's what I would do. Let's actually reproject this out. 1, 2, 3. So here's 3. Here's 2. And I think 2 is better just targeting the, actually you could take profit at 2. That's fine. Actually, no, I would take profit at these bodies, and then 3, and then 4, like this. Once again, treating this as void. So TP1 at the end of these bodies. Or even at this. Actually, I like this high. TP1, and then you can trail, right? TP1. I like trailing to break even wherever you had your break even spot. So your break even spot often becomes the trailing stop, which is so cool. I almost wonder if actually it's better to take profit at 2 projections. And then if you take profit at 2 projections, you can use 2 projections. Wait, this is interesting. You can use 2 projections as your trailing stop. So once again, the break-even spot becomes the trailing stop, and then once you hit TP2, the TP1 becomes the trailing stop. Anyway, that's an interesting idea. I'm just gonna take profit here though, but it's an interesting idea. I'm gonna remember that for the future. So, boom. TP1. It's a very interesting idea. TP2. And then a nice little TP3 here. And right at 4 projections, and that's it. Bang. Bang, bang, bang. And why do we have such conviction in this? Because of the whales. Thank you, whales, for telling us exactly what was going to happen. We appreciate you. We need to name this the specific thing. Remember what FA said? He said this never fails with this the whale thing where absorption and aggression. Let's ask ChatGPT for a name. Bro, FA said when there's a whale with absorption into lows before your trade, whether it be a IFG or outside bar or whatever, or pin bar or whatever, and then there's aggression of a whale into your entry, it like never fails. What should we name this concept that FA told us about? FA sequence, load launch, trap strike, two-phase whale's confirmation. I don't know. I don't know yet what I want to name it. Anyway. Bang. This is my shadow model. IFG off the end dog with the FA's confirmation. $10, $18, $20 inversion for value gap on the 5-second. No, not inversion for value gap, shadow model. Shadow, and then aligning the end dog with a 5-second IFG. Bang. 10, 18, 20. Hey, what up, Akash? Right now I'm journaling this trade, which I think is so cool. We have absorption of a dumb whale into these lows, getting liquidated, and then a smart whale offsetting his position into this inversion for value gap. So we have absorption and then aggression. And FA said when you get absorption and aggression into like an inversion for value gap like this, it like never fails. Wait, someone retracted a message. What'd they say? What'd they say? Anyway, FA said this like never fails. So just remember this: absorption, aggression. But What up, Akash? Hopefully you're doing good. Might take another break. Was this a 15-second inversion as well? Because if so, it might be a little bit cleaner on the 15-second. Let's check. Yeah, it's definitely a little cleaner on the 15-second. Right? This 15-second closes like this. And definitely a little more smooth here off the end dog. Yeah, I like this 15-second as well, and you can get pretty good RR. Last days, I made 3K in opening of New York, but down 1K due to overtrade and normal entries. You made 3K in personal or prop firm? Either way, that's a lot. That's insane, bro. You go break even here. Beautiful inversion here. And then, once again, the whales, right? Prop firm. Insane, bro. That's awesome. That is awesome. Yeah, so look at the whales here, right? Instant V-shaped recovery with absorption and aggression. And then 15-second inversion for eye gap off the end dog. Oh, no, it's not the wrong one. That's the wrong one. I meant bullish. Boom, boom. V-shape recover. Instant V-shape recovery. 15-second inversion off the end dog. Go break even right when we hit start. Actually, when we start to run this LRLR, I'd go break even there. And then look at the RR on this trade. Just beautiful RR. Like guys, this is the RR on this is crazy. And then we go 8 projections. Like, jeez. And you could even depending on how you want to mark this out, like you can mark this out 4 projections, you can mark this out, you go 7 projections, and if you want to be aggressive like this, then it's technically 8 projections right there. I would mark it out. I would have stop loss here, which means I would most likely, yeah, I would most likely do something like this, where same as the other trade, right? 3 projections, TP2, 4 projections, TP3, and then I don't even know what's the other one. Oh, probably the end of the LRLR here for TP2. And it's crazy because this is 4R. It's like not, I mean, obviously, in real life, I think I'd have a stop loss like this. I'm just saying, I'm being realistic, I'd probably have a stop loss like this, but if you had conviction, maybe you'd have a stop loss like this. I'm going to be so for real, I think I'd put stop loss here. But, I don't know, it's definitely up to personal preference. 16 out of 2 made 1.5K opening. Wait. On February 16th, you mean? Hey, you're on your way, bro. You're on your way. You're well on your way. One day at a time. I'd probably take this like this. Even though I'm measuring out projections using the tight version, I'd take the trade like this. once again, you could have a way tighter stop. You don't need to have it this big. But like, I'm just saying, if it was a real trade, I'd probably have it that big. Just you know, just to be extra safe. Make sure I get in on break even, you know. So there you go, another shadow model here on the 15-second. 10-18-45. Shadow and dog aligned with the 15-second inversion. Ten 18-45. 10-18-45. End dog aligned with the 15-second inversion. Saving that. Now Akash retracted a message too. And then there's also the 1 minute version, which I also liked. The 1 minute version, same thing. It's like boom, boom, 1 minute IPG. You could have scalped that. I know I can mark that out. I just don't feel like it. Oh, look at the outside bar. Whoa. Oh my gosh. I wish I saw that. I wish I saw that live. You guys see it? Oh my gosh. This is an outside bar, right? Oh, maybe it's not. Oh, what the heck? It's actually not. It's equal outside bar. Maybe it's on the 32nd. Okay, wait a second. This is kind of weird. It's like, it's a pin bar. I bet that was a pretty good pin bar, honestly. I bet you this pin bar. Hold on, let's get rid of everything. Was a precision swing point. Let's see. I think I noted this live. I'm actually pretty sure I said this. Or now I'm curious. I want to go see. Yeah, so it's a precision swing point. Sweeping the liquidity below this low, below the true open. Dang, dude. Wait, this is so cool. This is a precision swing point, sweeping the liquidity below our true open, which is the 15-minute CRT and IPG. Nice, bro. Yeah, if that's working for you, that's great. I need 10. What's the one before this? 10:35. Wow. Now this is a fun trade. This precision swing point is fun. I'd take this every time. I'd take this every single time, dude. This is textbook. Below this true open. And then where's the 90-minute? We have a 90-minute true open at the previous one was 9:22:30, which actually we already souped over here. Is this really the most recent? I thought we souped the true open here. This is strange. We used the prior cycle's true open. So the true open of the prior cycle is still used for the next cycle. What? What? What the heck? 10:13. So within this candle, yo. No, we definitely used the prior cycle's true open here. Let's just go to the 1 second and find the actual exact time. Wait, this is really interesting, actually. So 10:13. So here's 05, here's 06, here's 07. Is that what the time it's supposed to be? Is 10:13:07, 0.5, 10:13:07.5. Let's just take the midpoint of that candle. Jeez. I mean, you have to admit, that is pretty insane. We used the we souped the prior cycle's 22.5-minute true open with a precision swing point. We get the close. No way, bro. That is too perfect. That's too perfect. It's almost so perfect that it's strange. It's just like incredible, actually. And sweeping out this low. Dang, bro. You have to admit, that's kind of cool. I wonder if there was a absorption. There was. Oh my gosh. We have Will sold 22 cons right here. Gosh. This is so cool. Will. Market sells. Sweep of the low. Below the true open. And then, bang, Precision swing point right there. And where's the 90-minute true open again? We already manipulated it at the low here. It was right here, and we manipulated it already. So, dang, yo, that's a crazy trade. That is so cool. The prior cycle was still relevant for this. Alright, that's enough backtesting for tonight. Wow. Wow. That's incredible. I genuinely cannot comprehend how precise this is. I mean, we even... Yeah, anyway. Jeez. How... Let's project this out. I would say just take profit at the opposing end like this. That's nuts. That's nuts. Wow. And you could go break even at this high. Wow. Yo. I have to admit, this just every day I blow my own mind even more than I already have. And it just never stops. It never stops. I don't know why, but it never stops. Bang. That's nuts. That is the power of precision swing points right there. Oh, and there was SMT there too. I forgot about that part. It's kind of important. It's 22-minute SMT as well. Wait, I forgot about that part. That's kind of important. I'm done with partial SMTs. I'm not using those anymore. The partial sequential, it just overcomplicates it. I'm only gonna do just sequential SMTs regardless of if it's the true low or not. There's SMT with this low with YM, but I want to see if there's SMT with this low here. Come back. Yep. There you go. Bang. That's... And the rest is history. And the rest is history. Wow. See, I'm done using partial SMTs. I'm not doing that anymore. The partial sequential SMTs. I'm done with that. If it's with SMT with the previous cycle, I'm including it in the... I'm counting it as SSMT. That is insane. The precision in these markets is unmatched. Oh my... Okay, I'm gonna end the stream here. This is just insane. Wow. 1041 30 precision swing point. So just like a pin bar, but it's a better pin bar. And then on the 32nd, 1041 30 precision swing point on the 32nd. Oh, I should probably have the other tree open in the image. And I really have to use the bathroom. Ten 41 30 precision swing point. On the 32nd, number 2. Okay, all right. I'll see you guys later. Yeah, I'll be back tomorrow to live trade. Peace out, everyone. Later.